All right, good morning, everyone. Let's see what's going on in the markets this fine morning. Okay, so Zan has a question which I'm going to address immediately. He says, bit new to this, wasn't the London Open an hour ago? So Topstep decided to call this show the London Open, but I never trade the Open. I'm not someone who just starts clicking buttons as soon as I sit down. Most of my setups are based around what the price is going to do around the initial balance once the initial balance is set, which is about an hour and a half into it. So we are probably going to be renaming this to something like the London session or the Euro session or something like that. But yeah, for now it is called the London Open, and it is what it is. So hopefully that makes a bit more sense. Before I do any sort of trading, especially for the products that we currently have on Topstep, I look for understanding first. And you're not going to get that on most of the days as soon as the market opens. And also, the London Open is not nearly as exciting for these sorts of products as it is for the New York Open. You know, even the Tokyo Open, you know, you look at some of the quieter sessions, they're not crazy. You know, they're just like, okay, we've opened, a little bit more volume starts kicking around, but nothing much is going on. I am looking at platinum today. It is attempting to fail the auction at the moment around a pretty interesting level, which is the ADR high. Now, I did lock myself out for the next 5 hours because I wanted to focus more on natural gas and on Rbob, so I'm going to be trading that. And again, I'm going to call on everybody to to upvote that Eurex post that I'm always trying to get out there so that we can get some more Euro-specific products on Topstep. I'm just gonna make some markings here, but I did just post it in the chat so that you can upvote it, and then maybe at some point, you know, the powers that be will bring us Eurex products. Until then, we've got to be careful with the London session because on a lot of the times it's going to be pretty quiet. I'm actually going to switch to one of the combines here because obviously I can't trade in this. So let me just move this over here and get one of these over here. Now, as you know, we're not allowed to have the XFAs and stuff. They are kind of getting our charity XFA getting ready, but that's not here yet. So in the meantime, just to illustrate some of the setups that I might be seeing. So yeah, what's going on with platinum? Platinum is actually exhausting the average daily range, which it has been doing for a while, and it's now effectively failing the auction. So what I want to do is just to see whether we can get a rotation back from ADR high and then all the way down to the other side of that initial balance. Now, initial balance is these two candles, so this one and that one. And we actually have overnight VWAP just not too far away from the initial balance low. They're pretty much around the same price. So that's going to be a decent target for this in many different ways, however you want to spin it. Now, if it carries on higher, so be it. However, let's keep in mind the daily chart. We're coming into some supplies on the daily chart. They're already being reactive. We can see that from yesterday. It tried to get higher and then immediately got smashed down. Now we are seeing a little bit of rally-based rally here, but really whenever you reach the final quarter of the move, which is what this is the high, this is the low. So we're reaching into that top area. Shorts are not a bad idea there. You certainly don't want to be longing into supplies on a larger time frame because you're going to have a whole bunch of people who were short there last time, and if the supply is relatively new, you're going to get those same people being interested in shorting again. So something to take away from the larger time frames, even though we are intraday traders. So yeah, I'm going to leave this to run. And yes, I am still a little bit sick. This bloody cold has been hanging on for about 2-3 weeks now. So it's very, very annoying, but it is that time of the year. So we just have to push through it. This week, we're going to have a shorter week. So we have the Jimmy Carter's funeral on Thursday. So the markets are not going to be open. And in respect of honoring his life, we are not going to be on air. So regardless of whether it's the main broadcast or London session or any of the other segments, we are not going to be streaming on Thursday because of that. So yeah, just keep that in mind. And then we're back, well, the main broadcast will be back on Friday. And I'm going to be back next week for Monday. All right, if you're here for the first time, if you're like, what is going on? Who is this woman? I am a Series 3 licensed trader. I've been with Topstep on and off for probably about 10 years now. I actually went away to work for some other sort of in-office firms before COVID. And then when COVID hit, some of those firms actually shut the doors, and I decided to go back to remote trading, and it was probably one of the nicest things that I could have done for myself, because that means I don't have to travel anywhere. I can just be in the house and spend a lot of time with my 8 dogs and my husband. But yeah, I've been trading since 2000 well, really, I started in 2007, but in 2008 I started taking it very seriously. And within the first 2 years, I had quite a lot of success. And then that carried on. I really enjoyed the new activity that I found. I was a session musician before then. I was a sax player and an electric guitarist for a lot of pop and rock bands, and even for some of the established artists like Rod Stewart was one of the highlights of my career. But yeah, so after that, I decided that I've had enough of music, because I've been doing it since I was 14. So from about 1994 all the way to really 2014, I maintained a parallel sort of career being a session musician and a trader. And then trading just took over completely. And I decided that I'm not going to do music anymore. Hopping around the world as I was getting a little bit older got a little bit more tricky for me. So the energy wasn't there. You know, if you're always on planes, you're always knackered. It becomes a little bit, tough to do stuff. And then obviously the money was a lot better too. So we all get into this because it offers us, a little bit of a better lifestyle. You have more time. You can be more flexible with your time, and effectively you don't have to hop around planes and buses, and you're just never at home when you're a musician. And whilst I really enjoyed that when I was young, I started enjoying it less and less. So being able to control my time a lot better, it was great. It was something that offered me intellectual stimulation. So trading is every day you have to be a detective. You have to play detective to see exactly what is going on with the markets. It's never the same, so every day is different, even though the setup might be the same. So we might be looking at a failed auction, but that can be, maybe the start of a slow auction higher. So the trick is to see whether the price is spending time there, whether there are still sellers giving us the follow through, or whether maybe we have a little bit of a limited auction on our hands. And all of that means fast reaction times, especially if you're trading during the New York session. And it's all around quite a fun activity for most of us. And yes, I'm going to say fun. I know for many of you, you find trading a little bit stressful when it's not going well. But I love it so much that it doesn't matter what's going on. I'm just happy to be able to do what I really love every single day and spend my time and experience hanging with you guys, right? Trading can get a little bit lonely, and having the Topstep community and somewhere to tune into and to talk to some other people, that's great. And that's changed everything for a lot of the traders. All right, so let's see. Here we have a question. On average, how much time do you spend looking at the charts once the London session opens? Okay, so I have my own software development firm where we have a whole bunch of nice automated levels and stuff. It kind of looks like this. So, it can tell me at a very quick overview what is going on, where we are, whether we're exhausting any levels, whether we're opening inside or outside of value. So I don't really spend that much time staring at the charts. At this point, I know what my setups look like. And if they're not doing what they're supposed to be doing, even though I do trade from a 15 and a 30-minute chart as a sort of time frame for the setup, I might enter from a lower time frame, but that is what I look for as the main confirmation of the setup, right? And then I will keep it for about 2 to 3 hours. But if something's not really doing much in 20 or 30 minutes, I will cut it, and then I will just go and do something else. And I will effectively not spend a lot of time staring at the charts. I'm not a scalper. I call myself more of an intraday swing trader. So I aim to capture anywhere from, well, if the setup offers me something, so I aim to capture anywhere from about 70 up to about 160 ticks for some of the more lively products like Rbob, for example. On platinum, you don't really have that sort of a range. So if you get about 50 ticks out of it, that's absolutely fine. Although sometimes it will go into a trending move. But even so, you're probably only looking at about 100 ticks there on most days. So we're talking on most days. I'm not talking outliers. I'm talking on like what can you get day after day. Right now I'm trading platinum. But I trade multiple products because of the systematic approach that I have. So I mainly focus on energies and precious metals. I'm not much of an equities trader, especially not US equities, but I am a DAX trader. So take that as you will. We don't have DAX on Topstep, which is why I'm always pushing Eurex products. And DAX is an excellent product to trade. It is probably one of the smoother products out there. So it really pains me that we don't have it for the London session. In fact, when we were doing some of the negotiations for the London session, I was told that DAX will be available very soon. So let's start it, and then it's going to come along. Unfortunately, it's been more than like 6-7 months since that promise was made. So obviously there was some bottlenecks to sort out, and they're still not sorted out. So I'm a little bit, deflated about that because it's not really what was agreed, and it makes this whole experience a little bit difficult because I have to keep hopping around, almost like trading stocks. You have to find what's in play, and I hate doing that, right? I like to focus on like 3 or 4 products and then always to look at the same charts. Now unfortunately London doesn't always move, so you have gold that moves one day, and then you have equities that move another day, and then you have platinum that moves another day, then you have copper that moves another day. So that all brings in a slightly problematic jumping around charts and stuff. And it's not it's not that bad when you have a systematic method, but I just feel that the focus is a little bit diluted across a few things to try and figure out what's going to move today. For that purpose, I do use the volatility indexes from CBOE, which does help. So you can look at, for example, CVol for platinum, right? And it will tell you whether today platinum actually is moving or not. So, for example, let me try and drag that out. You can look at gold VIX equivalent, or you can look at OVX, which is crude oil equivalent. So here we go. So let me just remove that. So this is the crude oil VIX, and it tells you that right now we're sub Still sub that 35 level that I like to have crude oil at. So I'm not trading crude oil, at least until we start getting, over closer to 35 OVX, but also each of the products like platinum, copper, they all have their own volatility index. Now, I don't know whether I can find them here. Maybe I can. Let's see. Volatility index. They do have it on the actual CME website, so maybe I should go and have a look at that. And in order for them to not be delayed, you do have to sign in and sign up. So let me see if I'm signed in already. So let's see, platinum, CBOE, volatility. Oh, come on. I've lost the page now. Sorry, guys. It's very early in the morning. I'm still drinking the coffee. VIX volatility products. Yes. Okay. Let's see. Let's try that. Why is the CME so, like, their website is just absolutely terrible, I've got to say. Just let me find the page that I had, like, just literally a week ago, and now it seems to have just disappeared, so... Then I tried looking for it, and this comes up. It's like, yeah, great. Where are the indexes, dude? And then they have this weird list that is like, oh, single product. It's like, thank you, but I need that. Like, there was this like little table of the of all the indexes, and now they seem to have moved it, and I have no idea what they're doing. I mean, I get that they're trying to improve their whole website, but this is not really an improvement. Here we go. Okay. So if we go to metals, now for metals, usually anything over about 21 is very acceptable, right? Anytime it falls to like 19, 18, just stay away from it because it just dies a death. And platinum at the moment is sitting at about 24, 28 for its volatility index. Similarly, we have silver that has actually picked up in volatility, so I haven't looked at it, but I would imagine that would be pretty lively at 28 CVol. Copper, I like it to be around 25, so it's like, yes, it's kind of kicking up, but it does go through periods of being very, very quiet, and that is just like watching paint dry. Gold, again, I feel that even though gold does move, right now it's been sort of ballpark floating around 14, but I do have that in real time. So let me just see what happened after the big move yesterday. However, even because of the big move, you would expect some really nice smooth movement, but it was very range bound, at least for my liking. Yeah, so there was a huge spike quickly yesterday. And you can see that. So huge spike, and then we're back down to 14. So the spike in volatility was not sustained, and therefore, when I looked at it this morning, it just looked terrible. Like the whole chart just looks meh. Yesterday it looked better, it looked more promising, but until that climbs to about 20, 21, 22, I don't really want to trade gold. So that's kind of how I approach different products, and to make sure that the volatility is there in the product that I'm looking at. And then once the volatility falls, it's one of those things where you have to bail and look for something else. It is the nature of trading alternative products. I actually enjoy switching it up every so often, maybe not every day, let's be real, but every so often, hopping to a brand new chart with a slightly different, quirkier behavior, maybe even calmer, to me, that's actually pretty nice. Someone's asking me how old I am. I am 44, for those of you who are new here. Did I pass the Series 3? Yes, on first try. It is not my first qualification. I actually had a similar qualification in the UK, which actually came in 3 different parts. So it wasn't just just like, oh yeah, one exam and then you're done. It actually had like 3 modules to it. So one module, you either choose securities or derivatives. I chose derivatives. And then you had risk and taxation as the second exam. And then the final exam was regulations. So it's like 3 whole horrible things. And out of all of them, bizarrely, risk and taxation wasn't that full of equations, but the derivatives had 13 equations, and it wasn't just, a little bit of hedging here and there, right? It was like, how do you calculate forwards? And then the question was, if a bank was holding, the let's say some of the currencies for a 3-month period, what would be the adjusted income given the interest rate of such and such? So then you have to take in the interest rate, like it's like, ugh. Now Series 3 doesn't have that. Comparatively to what I had to do before, Series 3 is one of the easier ones. It's just the length of it, because it's like 125 questions, right? So yeah, that was the only thing, but it's a long exam. Now I managed to finish the exam way ahead of time. So I actually finished it in about, what was it? We were given about 2.5 hours. I finished it, I think it was like in an hour 30. And then I thought to myself, well, this is either a good thing or a very, very bad thing. Because, I finished all the questions, and as soon as you click submit, they will give you the answer. You don't have to wait for the results to arrive. However, the computers that they were doing it on, they were Dell computers from prehistoric age. So when I clicked the button, it just spent 2 minutes. I don't know what it was doing, but it seemed like the longest period of time ever, and I had cold sweat and everything. Not that it would matter if I failed it, but I really, I'm a perfectionist. I really wanted to pass it in one go, especially considering I had a similar qualification before. So I'm like, well, this is going to be embarrassing. And then I clicked, and I was fairly confident in probably about 97% of the questions. But then there was the 3% that I was like, I'm not quite sure that I got that right, because it was a bit of a trick question. And then I clicked, and it said, right, congratulations, you passed. Go and get your certificate. So I was like, oh, that's good. I don't have to spend another sort of 3 weeks hard graft studying. Because you do have to study, there's things you just have to memorize, like things like regulations and laws, and what is the fine for this and what is the fine for that. Now, if you're not a public facing individual, and if you don't ever intend of giving advice to people via newsletters and stuff like that, and you're just trading by yourself, I mean, you could do a Series 3 out of just the interest of how the markets operate. It would give you that outlook, but it is not necessary. Is it going to make you into a better trader? I would argue probably not. because, trading systems and system design is all about knowing, the risk reward side of things, knowing when to change your mind, when to flip to the other side, when to wait, when to do a breakout trade, when to do, they're not going to teach you that, but they will teach you the ins and outs of how the hedges operate, which does provide a bit more of an insight into how, why the market makers get involved at certain levels. Like, for example, options are like the option chain offers some very interesting insight where the market makers have to hedge their positions. Like, let's say you have a level where there's a lot of calls located, and then we're coming up to that level, and suddenly you see the price starting to go sideways, slow down. The volume is sort of starting to turn to the other side. More and more aggressive sellers are stepping in. And then finally you get that big move in the opposite direction. So what happened there? What happened is that the market makers decided that this has gone too far out, and now they have to hedge their inventory. Right? So that's why it happened. It's not like some hugely mystical, oh my God, what is going on? So if you know where those levels are, and if you know how to apply them in your trading, that is helpful. And from that side of things, Series 3 does cover hedging and how the big companies who, for example, have to buy, thousands and thousands of pounds of copper, tens of thousands of pounds of copper, how they are effectively, I'm going to exit this because it's not going anywhere, because they have to, let's say there's a heating oil, that you make heaters. Well, you're going to need copper, right? And they need to buy sometimes like 150,000 pounds of copper. That's a lot, right? Now, when you cut it down into contracts, it might not be that much. It might be like 100 lots or something. But they still have to execute that in the live markets, right? That's going to have an effect on the market. Now, one thing to understand about the hedgers as well is that it's not beyond the realm of possibility. They will also have some sort of iceberg orders as well, especially if they're trying to close out the entire position. And then they have to partial the orders, especially in thin markets that might not. Like if you look at copper, right? Let's go to copper. It's only got like 6, 7, 10, 12 contracts per every price, right? That's a thin market. So if you were a company that needed to close out the position, so you're exiting the position of your hedge that you did as a forward sale, and now you have to execute 100 contracts. Well, you clearly won't be able to execute it in one go. So they're going to execute maybe 4 here, maybe 10 here, maybe 5 here, another 5 here, and they'll keep going. And that's what creates the icebergs. So it's not necessarily even that they're hiding what they're doing. It's just that they are, trying not to derail the market completely. And another thing to note is that if you're a bona fide hedger, like if you actually are either a user or a producer of the commodity that you're trying to trade or hedge with, you are not subject to size limits. Okay, so some of us who are speculators, if I was to whack in 100 lots in copper, at some point I will have to report that to the appropriate authority. It's like, okay, I've gone over the size limit. I'm a speculator, I'm not a hedger. And now I have to tell you that, I'm going to be trading this size that exists in futures, right? But with the bona fide hedgers, they do have to report it, but they don't have size limits. Whereas me as a speculator, I will have a size limit. There are actual limits that you can't get over unless you're a bona fide hedger. So again, knowing that you can't just whack in 100 contracts in a thin market willy-nilly or 250 or something, even if you're a well-capitalized individual that can absorb that sort of size, you just can't do that because they're like reporting limits. And if you're a speculator, is an absolute no. It's like they will just say, well, no, you're not a bona fide hedger. What do you need this for? So there are things that Series 3 does teach you about, but is it going to make you into a great trader? No, but it's going to provide you some extra information about open interest, maybe a little bit of depth to how the whole futures markets operate, right? Blake says, Dee, you're quickly becoming one of my favorite segments on TSTV. Thank you so much. I wish we had DAX. It would be a lot more exciting, but I do appreciate the sentiment. Is there a reason you're less focused on CL? Minzy, yes. So if you even look at yesterday where we supposedly had a big move, NYMEX moved like 100 ticks yet again. That's $1. That's painful to trade, right? It's very painful to trade. So what tends to happen is that you're effectively looking at the maximum profit on the day, absolute maximum profit of 100 ticks. I don't like that. I like to have 200 to 300, ideally 400 ticks in a day so that I can grab my 70 to 100, okay? If I don't have that prospect, you're left with a couple of choices. You can either size up like a lunatic, which I absolutely despise doing. I always size to the appropriate balance of the account that I'm trading. And that could be vastly different. You can have prop accounts where I have 50K. I can have my own account where it's a 7-figure account, or you can have, small combines that are like $4,500 to start with. And to me, every trade is pretty much the same, right? Aside from the position size. So I would never, I feel very uncomfortable starting with 4.5K position size and then whacking in a 10 lot. It's just, I've seen the risk of ruin, risk of ruin bells start ringing in the back of my head, just going, no, no. Because I've seen people over and over who are sizing up like lunatics. They never last. They might do well for about a month, or like the median average for people who are sizing up too much is about 1 to 3 months life cycle on the live account, and even in the XFAs, right? So for me, it's just, I don't know, it's not really that that sane to have a small account size effectively and then immediately size up. It doesn't it doesn't compute to me. But every trade I take, to me, it's all ticks. It's targets. What's the volatility of the product? What is the expected move of the product? Now, I talk about my algorithmic ranges a lot. For example, I'm still thinking, this could be a decent short if we can get below the ADR high. Therefore, I'm not going to be going long here. Why? Because the expected move for platinum is already done, right? It's already over. If it goes into some mad outlier day, so be it. But for me, the way I'm looking at the market here is I'm better off catching the short maybe a little bit higher and then having a better risk profile and being able to catch 70 to 100 ticks, or even just like 50 on platinum because it's not that big of a product, than trying to chase a little bit to the upside when I know that my upside is capped, having on most days, like just statistically speaking. It's not to say that it won't go into a mad uptrend. It can. You can have outlier days that are much bigger than all the other days, right? But the gist of the whole exercise here is for me to find a reversion trade that's going to bring me a lot of upside or downside to the opposite party, right? So if this has gone up, up, and up all throughout Tokyo and overnight, does it make sense? Then it's going to just keep going. On some days, yes, but we're hitting the area where we had sellers. Now, where are they going to be? Well, they can be anywhere here. They can even try and smash through the intraday level here at 963. And this is where some of the options levels come into play, right? So once you are out of everything, you need to have a look at options. the first optional level that I have is 960, where incidentally we actually stopped, and then the next one isn't until 965. So if I don't get my sellers appearing here, I'm absolutely fine taking a partial loss and then waiting until we get up to some more interesting areas like up here. Now, what will this sort of outlook do for us and for the plan? What's going to happen is if we do get up there, we're going to do that stop run, liquidity run that everybody talks about. But it's nothing more than just market makers having their interest all the way up there and then just smashing through all of the other levels that may have had interest at another lower level yesterday, because that changes. The gamma flows will change throughout the day on a lot of the times. Now, platinum is not as active as some of the other products out there. And, you could have another idea that if we go above 960, that you have 50 ticks to play with to the upside. Okay. And in that case, you become one of the people who are running a more difficult trade through the supplies that might add time onto whatever you're doing. So you have to realize that this trade, let's just try along and let's see how that's going to play out. So let's just do a long, and I'm going to do this on a 35 tick stop. And then we're going to aim for this 50 tick. So this probably won't be the fastest trade ever because we have to get over 960. Now, once we get over 960, you still might have to battle some orders on the way through. But the next stopping point, really, there's nothing in between, right? There's nothing in between. So you have to be prepared. This is a slow upside move. We're sitting outside of the initial balance, but it's a slow move. So you have to be prepared to sit in this for the next sort of 90 minutes, 2 hours, even 3 hours sometimes in order to get the 50 ticks. I don't like those sorts of trades. I really don't. I like my mean reversion trades to last me maybe 90 minutes, 2 hours, but not for the sake of 50 ticks. I want to get 100, I want to get 150, and in some occasions 220 ticks. That's like my final target if the product that I'm trading actually offers it. But whenever something falls down, like crude oil, whenever it dries down to $1 a day, that is extremely difficult to trade. It's slow, so you enter a trade and you're wondering whether the internet is on. That's how slow it gets. When it does move, it moves. Like yesterday, I was dipping in and out into like sort of fast markets, and someone said, "Oh, crude oil is dropping," and I measured the move. It was 50 ticks. It's like, since when is a 50 tick move in crude oil perceived as, oh my God, it's dropping? Why? Because the candles have dried out. Like even on a 30-minute chart, it looks like a big move, but it is not a big move. Okay, it is absolutely tiny for what crude oil used to be. So the reason why I'm moving away from crude oil is because of the dry up in liquidity. I do not like trading things that are less than about $2.8 a day. So, or like, let's say 280 ticks would be ideal. 180 to 220 is just about acceptable, but you have to lower your targets to like 50 to 70 ticks, up to 100 sometimes. Because remember that you have the projected range. You have the range of expected movement of, let's say, 200 ticks. How likely is it that you're going to grab 50% of the entire day? How likely is that? And if it's not a trending day, if it's a range-bound day, again, how likely are you to take 50% of the perceivable move? It's not very likely. If you catch a trending day, maybe, yes. But for the most part, trending days occur only 30% of all days that we've observed in a sample size, and that goes up to 8 years. So something like gold does have a 42% incidence of trending days, which is a lot higher than ES and NQ, which sit between 32 and 35%. That's not a lot of days when it just goes into a one-sided move. It's not a lot of days. So if that's what you're looking for every single day, you sit and you look for that big move and you always want it to just keep going, just know that that's not the norm, okay? The norm is that we have a normal ebb and flow, and in fact, neutral days and what the profile people call normal variation day, which is where you extend the size of the initial balance by one time. So you have, let's say we have a initial balance here that measures 65 ticks. Well, if we go up 65 ticks or ballpark thereabouts, that will represent something called the normal variation day. That would be the normal day. The normal variation day will be if it extends it by two times the size of the initial balance. So normal day, why is it called normal day? Because it's just normal to extend a little bit and then to fade back down. So you don't expect the market to keep going on a normal day. You expect it to effectively just establish a bit of a range outside of the initial balance and then to rotate back. Okay, so that's a much better way of figuring out day types and what is going on in the market than kind of going, I wonder if this is going to keep going up. Well, have an idea of day types that are backed by statistics. This is why profile is powerful. It's not because, we're so clever we can read profile. It's not about that. It's about giving you more understanding about what is happening in the day. So if you know that you can only have about 3 or 4 day types and that your targets can actually be very clearly defined based on the day type, and which one happens most frequently, it gives you so much power, right? So for example, if I see a neutral day type, like yesterday I did an Rbob trade very late in the day. We had some problems with the API yesterday. I don't know whether you guys were here, but we had problems with the API. So I tried to trade, couldn't see my orders going through at all. It was just market orders, but limit orders were not there. So I couldn't run a stop, nothing. I could see it on the chart, but they weren't displaying on the DOM, which meant that they didn't go through to the exchange. So, and then it said API error. So I stopped and I actually traded very, very late in the day. I ended up the day maybe like 350 or something up. And that was mainly because of the Rbob fade that I did literally in the last half hour of NYMEX, and that was it. So I did a long on Rbob, managed to catch, I think it was about 50, 60 ticks out of that, and that was good enough for me. But the whole trade lasted less than like 15 minutes, right? So that's the kind of scalp that I like to do. You know, my scalps are all like at least 35 to 50 ticks. Anything else is like, ugh. But if the whole setup happens a little bit earlier, Rbob can offer you easily 160 ticks on those sorts of setups. Now, we are in the time of the year when a lot of people are still away. So maybe next week we might see a little bit more, committed normality in the markets. And what does that mean? Well, tape yesterday on equities was so weird. Like I was watching YM. I have some coaching clients who trade the YM, and I was watching NQ and ES. They were so weird. It was like such a weird tape, man. Like I was just like, what are they doing? Like there's no commitment. There's so many wicks everywhere. It looked such a mess compared to what it normally is. And I managed to just about squeeze out a long trade in DAX. And good that I did that, because it just smacked back through the whole of the range that it made earlier in the day. But yeah, I managed to get a pretty decent trade out of DAX yesterday. And that was it. That was my entire day, Sometimes I will sit in trades for a very long time. So sometimes my trades will last for 3 hours. But that's only if the instrument offers me enough liquidity in order to grab a number of ticks from it that I would deem acceptable for that kind of time that I would invest. But I don't sit here. If I'm in a trade, I will not sit here and watch it tick by tick. I will go do other things. I will go walk my dogs. I will go have a rest. I will play some video games. Like anything to just get out of the mind space of the screen being there and, constantly exhausting your mental capital whilst you wait for your trade to work out. Because for me, it's a lot more exhausting sitting here and watching the trade than going away, then coming back, seeing where it is 30 minutes later, going back. Now, when I'm entering or exiting a trade, that I don't think is doing very well, that's a lot more mentally exhausting as well, because you do have to sit there. You have to wait for the appropriate entry. It's not as easy as just kind of whacking in. Like, for example, my first idea was a failed auction trade. When we held above the initial balance, if you're not here to watch that in those first sort of 15, 20 minutes, then you wouldn't have seen that. So I would have had like a loss unnecessarily for full -1 hour instead of saving some cash, right? So it's, you do have to spend some time at certain inflection points of the trade. But if I'm planning for a trade to last for 3 hours, I will not be sitting here and just going, ooh, what's going on? So yeah. All right, let's have a look at the next question. Tessa Nix? I don't know. I'm probably butchering your name. If I am, I do apologize. Can you detail how you detect when a trend is ending? I feel like I frequently got trapped by the trend end. I use the TPO profile. So you can also use the volume profile. When you start to see volume building, let's say that we were in a nice trending move. So there's a couple of ways that I like to do it, but usually TPO profile is going to be appropriate only if you're running a trade that is lasting a bit longer. If you're running scalps, then volume profile is probably your best bet. So let's say you're in a nice trending move. We broke away. So right now there's nothing to do on this platinum trade. I am on a 100-tick chart here. You can also use a 500-tick chart to maybe slow everything down. Now, once volume starts to build, and once you get the migrating POC that cannot be broken. So what's the POC? It's the widest point of the profile. It's where the most volume was traded, but it also represents some sort of a price agreement, usually. I don't like starting trades at POC of any kind, but I do like using it as target or as a means to exit a trade. So if I'm in a trending move and I see that the price is starting to build volume, and we're not making any new advances, and then suddenly you get the POC moving up there as well, and the price just cannot go above it. It just keeps knocking into it. It's not moving, moves away from it, knocking into it, building volume. That's a bad thing for a trending day. So at that point, I will bail, and that will be it, right? That's the early exit. It's very difficult to do it in a discretionary way, because it plays with your emotions, because it's money, and you're like, oh my God, if I don't stay in, I might lose out, I might miss out, the whole FOMO nonsense. Have predefined target areas that are based on problematic zones. Like, for example, I know the 960 was a problem zone. We're over that. Where's my next zone? It's a supply at 962.7. Where's the next one? At 965. But that's my end target. So, that's my end target. So I'm not going to be looking past that and being like high on hopium that we're going to have some massive move today, because that just doesn't happen. I've been doing this for 18 years, and I know that trending moves, when you catch them, it's like whoopee, once in a blue moon. You manage to catch a 6-hour trade or a 10-hour trade. But then what people tend to do, their mindset gets derailed completely, and they begin to chase that feeling. It's like chasing a line of coke or something. It's not even trading at that point. You're just chasing the dopamine rush, nothing else. It's not data science. It's not based in a systematic approach. It's not even based in a plan. It's just like, give me more. I like that. Now, if you're prone to dopamine rushes, and if you still get excited over winning, it means you're still at the beginning of your journey, and I don't care how many years you've been trading, okay? Even if you've been trading 10 years, but you still get excited over winning, there's something not right there, right? It's one of those things. You're not supposed to be excited. Good trading is boring. I really couldn't care less whether I lose or I win, because I know that I have a long-standing accuracy of 43% with risk reward of about 2.3, sometimes 1.7, but again, whenever I get 1.7, then my accuracy kicks back up to about 60%. So, it's on a seesaw, like it's on a fine balance of things. But generally, if you take everything, all of the non-isolated things, and just bung them all together, for me, it's 43% with average 2R for a profit factor. And that's why I don't care. I know that, whatever I'm doing has a positive expectancy over time. That's where your confidence comes from. And, win or lose, I just know that it's all within the probabilities of that particular outlook. Now, sure, did I have times when I was having higher accuracy? Yes. So during COVID, I actually had 71% accuracy, but I found that a lot of my trades back then, because it was so quick, I was taking more like 1.3 Rs. So again, you have to keep in mind that the higher the accuracy, the lower the risk reward. The higher the risk reward, the lower the accuracy. But both systems are equally valid if you can withstand the mental issues and mental challenges, I should say, with each style. I'm not a scalper. I absolutely hate scalping. And if I had to scalp for the last 18 years, I probably wouldn't be here for the 18 years that I've been here, right? Because to me, it's really labor intensive. Like you kind of come up with your own prison. You are constantly married to the charts. And if you're not there, you can't make money. And it's like, that really doesn't appeal to me. I came from a background of being a swing trader for the first 5 years, where you put on a trade, you don't think about it for 2 weeks. And then I went into intraday. So I wanted to make something that is kind of like in between the two. But the issue with intraday is that even with the way I do things, you still have to keep an eye on it. So I don't necessarily sit here and going, I'm just going to babysit this for the next 3 hours. I still have to keep an eye on it. So every 30 minutes, I'll be like, wonder what is done. Oh, are we still doing well? Are we still holding above initial balance? Are we still pushing through the supply? Did we reach the next area of potential problem? I actually have alerts on my other platforms that send me an alert to my phone at like relevant areas. So that definitely helps. All right, let's have a look at more questions. Tesorix, so a couple of ways. I wanted to also say with a TPO profile, if you are running a longer trade, once you get to 3 TPOs per row, you're done. Now, the 3 TPOs are taken from a 30-minute chart. So unless you are trading similar to me, that's probably not going to be as useful. But it is useful if you're running more sort of semi-swing trades. Hopefully that makes sense. However, anything shorter, I would use volume profile. Douglas PC goes, do look for bull flags, 3-bar reversals, reversion to readout. No, I actually don't use reversion to VWAP at all. If VWAP happens to be in an area that I'm looking at as a mean reversion, that's great. But a lot of the times I will have other references that are completely not VWAP. So to me, a reversion is a reversion back to value, to previous value. So, for example, right now, platinum is opening inside value, so there's no mean reversion here. But we could have had a failed auction, which is not really a mean reversion. It's more of a rotation. And there's a big difference. Mean reversion implies that you have extended some sort of a statistical measure way past, and then you're pinging back to whatever the mean is. And the mean, for me, is the value. So in order for me to run a mean reversion trade, I don't care where VWAP is. In fact, VWAP can be the starting point for many of those, because overnight you might move to another Globex VWAP, and then the move starts away from it. It's more of an urgency trade. However, then the value area is, let's say, 100 ticks higher. That is what my mean reversion setup would be. I don't care where VWAP is for most parts. If I see a mean reversion back to the other side and we're breaking outside of the initial balance to that side, VWAP is completely irrelevant to me. And similarly, if we have, let's say we had a projected move, but then we overshot it, and now we're sitting at, let's say, R1 or something like resistance 1, based of like pivot points. I will use the R1 to maybe run a mean reversion trade, yes. But I'm not just a mean reversion trade. Like, I am one of those traders that can mold my strategies depending on the day type. So I'm neither a breakout trader nor like I would say, if gun to the head, what sort of trader are you? I would say mean reversion. But it's not the be all and end all, right? So for me, I have several setups. I probably have maybe about 20 setups at this point, depending on the day type. If we have a neutral day type, range bound, I have a couple setups for that. Trade locations, again, second standard deviation from VWAP. So that's where VWAP comes into play as the volatility band for a range bound day. And then also just pure session highs and lows. I don't need anything to tell me where's the session high, where's the session low. Even a blind person can probably see that. And then I would look for takeouts of those to run my trade back to VWAP. So that's how I use VWAP. Do I look at bull flags? No. I will be completely honest. I look at no chart patterns. Sometimes if we've had a P-shaped day, which might resemble bull flag in some cases, I may take it into consideration, but do I sit here and does my plan go bull flag on 1 hour, bull flag on 5 minutes? Dragon crapping under a tree, also pattern. Bruno gave us a lovely, lovely picture of a dragon pattern, which is just as useful as the rest of them. If we can drag that out, Bruno, that would be brilliant. So yeah, to me, chart patterns of that sort, bull flag, cup and handle, head and shoulders, shampoos, bats, other mythical and non-mythical creatures, I don't really subscribe to those at all. They've never seemed that useful. They're always wishy-washy. I look at everything. I'm a coder, right? So I look at everything from a point of view as, how would I explain this to a machine? And if you can't go, oh, head and shoulders, where do you go in? If you can't exactly tell the machine when the entry point is, that's just a human thing. It's like ink stains, as far as I'm concerned. There is some use in it, but I just feel that that's so discretionary, and I'm not discretionary at all. I don't like being discretionary. I think it introduces emotions into it. And ever since I started, I was taught to make my trading systematic. So if you can't explain it to a machine, just don't do it, right? But yeah, so I don't use bull flags, but I do use chart patterns, not in that way, but the price patterns, right? Price patterns are different. They are 2, 3, or 4 candle patterns. So Dakota uses a 3-bar reversal. I use a bearish or bullish engulfing, so 2-bar reversal, or consolidation with an engulfing finisher. So again, that's a price agreement that breaks out of some sort of a range. That's the kind of setups that you usually see us take during Back to the Futures, because usually we run into a very quiet period. So we can do two things. In the beginning, if we get that range trade, then we will snipe it from either side. But once it starts to break out, usually there's an engulfing outside of that range that the quiet period has given us. So those are sort of the things. I actually have a little course so that I don't have to spend ages explaining the same thing over and over. This is where courses are good in that way. I literally made a course about candlestick patterns, which candlestick patterns I use, and exactly because of this. Now imagine being in an office, and every single time you do a trade and you go, oh, how did you enter? And I'm like, oh, I entered it from a consolidation with a bearish engulfing finisher. And they're like, what's that? And then you get that same question from like 20 people a day. And you're like, this is a waste of time. And it actually totally, questions from people who are around you, it started encroaching on my private life back then, because people are like, hey, Dee, can I just ask you like a couple of things? And I'm like, yeah, sure. And then I would spend the next 2 hours discussing like price patterns and TPOs and value areas. And then at one point I was like, you know what? Since these people are asking me the same questions, I'm just going to start putting them up on a website. Like I didn't really think, oh yeah, let's make a course. I was just like, I'm going to put a video up and, go and watch it. Just purely to like save myself time and to stop myself from explaining things over and over to the same, to different people, same concept. I decided to put it up on a website. And that's how the Market Stalkers thing came about. I put it on YouTube, and suddenly my little supply and demand video intraday had like 30,000 views. And I was like, what the hell is going on? Now, this was nearly 10 years ago. And, I never considered YouTube very seriously until COVID hit, and I was bored. And frankly, a little bit unsure of what was going on with the prop firm that I was with. So yeah, I was like, let's maybe go on YouTube to talk to some people, because I'm lonely. But yeah, and then it started turning into this whole thing. It's like, oh, do you have a course? Do you have this? Do you have that? And I was like, no, no. So I decided to spend some time creating things so I don't have to again, explain it individually, one person at a time. So yeah, for that purpose, courses are great, right? But anything else, you have to, even with any mentorship, any course that you get, you still have to do the work. Nobody's going to help you there. You have to go through the chart. You may have an idea of the mentor or coach giving you an idea like we do here on TopstepTV, but it's up to you to go and implement that and to go, all right, so let's see how many times this happens. And to be fair, some of the Twitter posts that I see from people, I go and I backtest them, and I'm like, this is complete nonsense. Literally, 90% of things that I see on the internet are either NASDAQ specific, so they don't apply to any other price action patterns apart from NASDAQ, or they're outright wrong. I don't know what these people are looking at. But yeah, some of the posts on Twitter, they just really crack me up, because I'm like, yeah, no. There are exceptions to that. There are a few people that are based very much in statistics, and I like that. Anybody telling you anything about a concept and they don't have statistics on it, just run away. Just run away, run for the hills. All right, let's have a look at more questions. Is it still a good trade when the inventories come out? I hate the inventories. Okay, so inventories back in the day, and they still do bring some sort of a move, but for the most part, it's going to be, I call it the storm in a teacup for a good reason, because on most days you get whip up, whip down, and then back to the middle, and then nothing. Maybe at some point after the release, it goes into a bit of a trend, but that's usually driven by something completely outside of the inventories. I find that the best trending day is actually Thursday. Unfortunately, we're not open Thursday this week, but it's sort of the day when we have the bi-weekly options expiry. So Tuesdays and Thursdays are generally better for trending moves. And then you have the knock-on effect of the inventories number that came out the day before that also drives the move. So options expiry, driving a whole bunch of people to either bail or, exercise options or whatever they want to do with them. And then you also have the driver of the number that causes the price to have to maybe correct in light of what the inventories are. But very rarely does it happen on the same day, right? It's always a day after. And that's the thing that I find with fundamentals. One of the reasons why I love doing the Nikkei trades post FOMC overnight is because the real move only comes in the overnight session and then the day after. So, it's the fundamentals. They take time to get these relationships sorted out. All right, what platform do you trade on? Whichever platform the firm wants me to trade. I have traded on probably, 12 platforms in my career. I've traded on this thing called Fusion. I've traded on Bloomberg. I've traded on TraderRate. I do like NinjaTrader. I do still have an account on MetaTrader 5 via AMP. I have but basically whatever platform they are offering, I will use that. Like I am totally not married to any particular platform for an execution purpose because, you can execute anywhere. However, for my actual charting, I will either use Ninja or MetaTrader 5 because that's where we built our indicators. We're actually translating our indicators from NinjaTrader 5 to MetaTrader 5 to Ninja. I don't know the timeline, so don't ask me. I have no idea when it's going to be done. How do you set the volume profile up like that on the right side of the screen in blue or yellow, that many bars? This is just the volume profile visible range that comes natively with Topstep X. So I don't set anything up. I think I may have played around with the colors a bit, but that's pretty much it. I just wanted the POC to be screaming, pink. Where did it go? There it is. So I wanted the POC to be like, so that you can see it. But yeah, the rest of it is just volume profile visible range. So VPVR, number of rows 24, up down 70. And then style. These are my settings. I don't think I changed that much apart from POC. I don't remember. Honestly, it was like a year ago. So for me to sit here and go, oh, this is just the default settings. I don't know. I probably did play around with it. Maybe with the visibility of some of the things. But I definitely remember changing POC because magenta POC or pink POC, that's me. So yeah. But it's just a native thing. I actually prefer, for larger time frames, I prefer to have the fixed range. So I will typically use 4 weeks, and then I will try and figure out where the POC is and where the high volume and low volume nodes are. But for the most part, if you know how to analyze supply and demand on larger time frames, it will give you very similar information, like very, very similar information. But yeah, I'm not married to any particular platform. I can execute wherever. I've used most of them. I've even used TradingView. I've used, literally, I don't think there's I tried using Quant Tower. I didn't really gel with it that much. There are too many sub-menus and weird ways of changing account names, which wasn't very obvious, so I kept making a mistake. And again, that's something that you can get used to. But I just didn't like that every time I changed, there wasn't one way to natively change the account that you're trading on. That was a big sort of bottleneck for me and Quantar. But I mean, it's a very powerful platform. Obviously, I use Bookmap as well. You can execute on it as well, but I don't gel with that at all. I didn't like it. So yeah, execution right now for Topstep, we're on Topstep X. I did have some XFAs on Ninja from Topstep as well that got transferred into live. But yeah, so I don't have any more XFAs. We're waiting for them to give us the Christmas XFAs where we're going to be trading for our charities, chosen charities. My chosen charity is going to be Battersea Dog's Home because my very first dog, the Cavapom that I absolutely adored, came from there. And I have been giving them a whole bunch of stuff. Every time I want to give something away, because I've got 8 dogs now. Every time I want to give something away, I always go and drop it off to Battersea because it's not too far from where I live at the moment. Even though I am moving out of London, we're trying to. Unfortunately, the offer that we had on the house, it didn't go through. I don't know why. I think they couldn't get the mortgage or something, and we're back in the hell of house viewings. So yay. But yeah. So I still have to stay here because of the viewings and stuff. Anyway, let's have a look at another question. How long have I been trading? Coming up to 18 years now. So yeah, it's been a while. I've been in futures trading for 13 years. And 18 years ago, I started trading my own money. But then after 5 years of that, I thought to myself, this is pretty fun. I want to do this for a living. And I then went from being a session musician for 20 years at that point to, hey, let's make this into an actual career. And here we are. I'm still here, still very much enjoying it. And every day is different. And since we've all gone online after COVID, that was kind of a blessing in disguise. I think when it started happening, everybody was like so freaked out that we're going to have a semi-apocalypse on our hands. And in many ways we did. But for the prop firms, it meant that they had to really go, like even the prop firms that weren't remote, they had to find a way to be remote, right? So it kind of brought this new era of taking everything online. That meant that they had to suddenly have some really robust systems on the back end if you were to trade from your house. So suddenly there was an explosion of remote prop firms as well. Like we went from having like maybe 3 prop firms in futures to all of a sudden having like 12 in the first year. And then now I don't even know how many of them. They seem to be cropping up left, right, and center. And please, guys, be careful, right? I did the video on my channel, Should You Copy Trade, on my actual YouTube channel, because some firms use the copy trader as like a predatory way to get new traders to spend as much cash as possible for, well, actually as little cash as possible with like certain discounts and stuff. And then they catch you to pay the activation fees. And that's kind of where they make money, with the view that you're never going to stay in that account. But that's kind of how it works. And I am really wary when I see that. It's like, if you're selling it for peanuts, then, you know, keep selling the activation fees for peanuts as well. But, you know, why are you suddenly bumping out? Like, I don't know. It's gone a little bit strange, right? And then I've made some comedy videos about how to get a payout. Because, you know, my channel is not that serious. Like, it is meant to be educational, and I do offer a lot of value there. But it's meant to be engaging and funny and, you know, entertaining. And my dad was a comedian. He carved out a whole you know, career being a parody rock star in Yugoslavia. And I grew up with that. So, you know, I've always been somebody who's very into joking and jokes and, you know, trying to be funny and stuff. And I tried to bring a piece of that personality to my channel. So some of the videos are quite funny. They're sarcastic. They are, you know, putting the funny spin onto trading and all the silly things that people are doing. Like one of the things I did was, when I was editing, I found a limping giraffe, and then I said actual footage of new traders in their XFA. And, you know, I do have fun with those, but it takes me an absolute age to do those videos because, you know, you have to conceptualize them. You have to put the right, you know, pieces everywhere. And it just, you know, it takes a while. But I do have fun. Like, whenever I'm editing videos, I'm like chuckling to myself. And, you know, my husband is like, "You all right?" I'm like, "Yeah, I'm fine." Just laughing to myself like the lunatic. Have you used Sierra Chart? I tried using Sierra Chart. I know that people are like, "Oh, it's got so much functionality." But when I looked under the hood, it's kind of like a glorified Excel spreadsheet. So I wasn't that enamored by it. I looked at their calculations for VWAP. I looked at their calculations of the value area in the profile that they offer. They were wrong. So I don't know why, but for some reason they have different calculations there. So I didn't like it, I'm going to say. So from the point of view of coding with it, my team prefers things that are kind of based on C# or C++, any kind of derivative of it that offers real object-oriented programming language and a whole bunch of stuff. And then we have the functionalities and the elegant solutions that we've implemented that we can then translate. And without that, it's extremely difficult. We actually had a very very interesting thing with one of our developers. He didn't know that Ninja was, I think it's C#. Are they on 8 now? I think that's C#8, but actually C# right now is like 9 or 10 or something. So he went and encoded some of our indicators in the newest version of C#, only to find out that that's not going to happen because Ninja did not go to the latest version. They're like still on the stable version or whatever. So yeah, that was a bit of a waste of time. But yeah. Anyways, things happen. It's just how it is. What are your favorite pairs to trade? I don't trade Forex, mate. I haven't traded Forex since actively since 2012. But, last time I did a Forex trade was probably 2018, 2019, and that was like GBP New Zealand, and then even that dried up. So my pairs, I don't trade any pairs. I will say that. The products that we trade, these are commodities. My favorites at the moment are gasoline futures, Rbob, as we like to joke, Rbob. Natural gas has been pretty decent as well. Platinum, I'm kind of so-and-so. There's times when platinum is okay. Other times I'm like, it's a bit dry. Menopause. But it can be a good product if you watch the volatility indexes, right? So right now, my favorite products are definitely Rbob and NG, natural gas. Sarah has a chick question. What is the shampoo you use to color your hair? Since COVID, I can't dye my hair as I get a bad reaction, so looking for an alternative. Yeah, so this one is called, so the only reason why I went back to red is basically what's it called? Color wash something viral. Yeah, so it's called Celeb Luxury Viral Extreme. Now, I used to be black and red back in the day, and I got chronically ill from the vaccine injury about 3 years ago and long COVID 5 years ago. So I have some health issues, and that affects my energy a lot. Like, I'm basically partially disabled. It's horrible. And I used to be an athlete, so yeah, welcome to my life. But basically, since that happened, I found any sort of fun, funky colors very difficult to maintain. Like, I just didn't have, like, when you have a problem just standing up, and your heart rate going to 160 from showering, any sort of concept of me dyeing my hair and having to be super elaborate with it was just a no. So what I went for was a balayage, which is like a blondish thing with darker roots, because my hair is dark. Well, it's gray now, but it used to be used to be dark. So all dark that you see here, that's all fake now. I'm literally salt and pepper at this point. I know my face looks young, but I am 44, guys. So, and then I found this. So I thought to myself, there's no freaking way that this can actually work. And lo and behold, I was I was on Twitter, and my private messages popped up from somebody that I follow already. So, and it was Manfred. So Manfred said to me, Dee, you need to dye your color. So I don't know whether Manfred is in today. And I thought to myself, you know what? I've been itching to try this out to see whether this would actually work. And of course, it might turn out horribly, but I wanted to try it, right? I really wanted to try it. So I went, F it. I'm going to go for the red. And if it looks horrible, it looks horrible. I'm just going to have to re-bleach it or something. And it did this. So this was literally me holding it on it's a shampoo. So, but you do have to use gloves because it will stain your hands. So I just use, I just use it to put it all over my hair. And I sat there for 10 minutes and went, there's no freaking way this is going to work, man. It's going to look really horrible. And then I washed it out and I'm like, actually, that looks all right. So, every time you wash the hair again, it will deposit more color. So it's I don't know why this wasn't a thing before. But yeah, that's the one that I use. So it's called Celeb Luxury Viral Color Wash Shampoo. Just make sure that your real hair is pretty light. So most of my hair is now either gray or blonde. And it worked. It wasn't even that blonde. It was golden blonde. But yeah, it worked. So yeah, we're talking trading and color dyeing over here. Malik says, what do you mean? Topstep is a third of the price of the XFA. No, I mean companies that are selling literally the, 20 accounts for peanuts kind of thing, 90% off. And then they effectively slap you with literally like 8 times the price or 10 times the price of the activation fee. But they expect you to buy like 10, 20 accounts. And then what happens is that you find that you actually have a $3,000 upfront cost before you can trade those. And for the people who are not experienced enough, doing that, like spending $3,000 a pop whenever you're going to buy multiple accounts, just to lose them a month later, and you probably don't have that kind of money, which is why you went for that option in the first place. That's the part that I find very predatory. Topstep is very upfront. They're like, well, this is what it is. We don't have discounts anymore. $49 for 50K, $150 for all activations. So notice that the activations do not change with the size of the account. It's still the same activation. And it's just to cover some of the administrative costs, right? That has always been very straightforward. But some of the other companies, they keep changing that. So activation is 200 at one point. Now it's 100. And then, outside of the sales, it's going to be 250 for a bigger account. It's like, what are we doing? It's like, how, if you have administrative costs that require an activation of the account and it's all demo, what is the difference from activating a SIM account that's a 50K and a SIM account that is a 300K? Like, it doesn't make any sense to me, just from a business perspective. And I know why they're doing it. It's a lot of revenue, right? But to me, that's predatory. It's just, that's something, I'm going to say. If you are already a developed trader, if you're already somebody who is extremely advanced and you've made money, you're consistently profitable, that's an amazing thing, right? It's like, it's awesome because you pay peanuts and then you get, all of the upside because that your skills are high enough and you're always going to get that initial upfront cost for whatever you paid for it, including the activation fees, in your first payout. But somebody who's not, you have to differentiate between the beginners and the advanced traders, where you're not consistently profitable, and yet you have dollars in your eyes and you're chasing the carrot on a stick. You're like, oh yeah, 20 accounts. I'm going to be rich tomorrow, yesterday. Awesome. And then you lose the accounts and all you've got to show for it is the $3,000 that you spent on the 20 accounts. So that's the part that I find predatory, right? So be careful if you're not consistent yet, if you cannot hold on to your XFAs longer than a week or a month. Copy trading should be taken very, very seriously with a pinch of salt, and only to be done once you've proven your competence, once you've held your account. Time is the only thing to look there, not how many payouts you've taken in a month. No, how long have you managed to hold on to your XFAs? If you've managed to hold on to it for 3, 4, 5, 6 months, that's the time to think about copy trading and sizing up, scaling up, right? It's not, I have one XFA, I get some money out of it, then I blow it the next day. That's not consistency. That means that you're still doing something that is not quite right. And in that case, if you're well capitalized, go for it. Just make sure that your payouts, if you're paying yourself out, then blowing up, make sure that your payouts cover the cost of whatever evals you're purchasing, irrespective of the firm. All right, let's have a look at another question, and then I'm going to be out of here. Blake says, what are the top 3 books you would say you learned the most from? I didn't learn from books. Like, books to me are interesting to maybe read about, general entertainment factor and stuff. But do I learn something from them? Probably not. I thought that the Tom Hugard's book, Best Loser Wins, has some very interesting points, but at the same time, he says things like, when we are in a losing trade, we are hopeful, but when we're in a winning trade, we're fearful. That never applied to me. Like, I'm actually quite the opposite. If I'm in a winning trade like this one, I'm in profit. I'm not fearful at all. And I've never had that. When the trade is not going well, I hope that it's not going to go well pretty soon so that I can cut it. And the only mental trigger that I have is when I enter a trade and it hangs around break even for like an hour. That's my mental trigger. So there's no like, oh yeah, I'm losing, but therefore I'm just going to keep increasing the stop and keep. No, I don't care about that. I'm absolutely completely okay with losing a trade because I know that I'm wrong, and then I have a clean slate to look for the next setup, right? And usually I like to have a little bit of time from the moment that I lose the first trade to the second one just to get more data. Otherwise, like there's, I don't have that. But I do recognize that most people do have that. When they're in a losing trade, they're like, and I've seen that in my coaching as well. I've seen a lot of people that are just, should I stay in this? And I'm like, no, it's gone like, 30 ticks against you. Get out. Like, what are you doing? But loss. Yeah, it's a control loss. It's fine. Just kill it. So that was a useful book on some level, but I thought that his life story around it was a lot more interesting for me. All of the stuff of how he grew and the things that happened to him and how he came to the realizations of, how to manage himself better. Did it help me? Not really, but it's a great book. Okay. Similarly, Trading in the Zone by Mark Douglas. He talks about how he was able to still trade even though he'd lost all of his money, which enabled him to suddenly get objectivity. And you will notice that when you're looking at somebody else trade, it's so much easier to call the shots, isn't it? When it's not you clicking the buttons. You're like, oh, you guys shouldn't have gone short there. Oh, are you effing blind? You should have gone long here. And it's like, pipe down in the cheap seats. Because whenever we get some people to do the same, suddenly they're like, oh, I don't know. What's happening? It's not that easy, right? But it's so easy to just call the shots and go, there you go, I was right. 965 was the target, or you see, we went outside of the initial balance. Like, it's so easy to do that, right? But it's not so easy to click the buttons and keep doing it. So that's what Mark Douglas was saying, that he was in a situation to still place trades as a broker and to then objectively start looking at the price, which taught him a lot about himself. Now, that's useful to know that objectivity really matters in trading. So if you get married to a trade and you're going, I definitely want this to go to 50 ticks, but if it doesn't, you have to be able to cut it. And you have to go, actually, it's going back to break even, I'll just cut it. So that's, again, one book that I found pretty useful. I don't even know whether there is there is a third book, but again, it's more entertainment value of a prop firm, and that's One Good Trade by Mike Belfiore. Now, I know that S&B Capital gets, they are like, some people love them, some people hate them, but the guy has written great books, right? So is it by Mike Belfiore? I think it's Belfiore. Yeah. So those are the three books that I found entertaining. Did I learn how to trade from them? No, I learned by sitting down, learning from people around me, and then applying that to whatever I was doing. So yeah. All right, guys, I think we've spent these 90 minutes pretty well. I'm going to wait until this platinum decides to do one thing or the other. Right now, we still have all green or white candles to the upside on a 30-minute chart, so there's nothing for me to do, so I'm going to let that run, play out as a hypo, and go into the data set about the market behavior. So even though it's a combined trade, it still goes under the experiential learning and data about the market behavior. Entries, exits, what worked, what didn't work, targets, that all gets tracked even after 18 years of me doing this. I'm gonna put down some plugs here. If you have made $5,000 in payouts, you can obviously request your payout club hat and a badge, but only if you're in the US. Only if you're in the US for now. Sorry about that. Topstep Discord, if you're looking for trading buddies, if you're looking for coaches, if you're looking for more information about anything and everything, Topstep X, status updates, everything, and it's basically just a great community there, so make sure you check it out. And finally, if you guys want to come and hang with us, trade online, and do the whole casting call with Dolby. You might have to make a video for him to see how you are actually doing things, then apply to the forum that I've just posted. Chris is asking me, when is my book coming out? I have 3 books and I'm not planning any new ones, so I don't know. I know that Hogue might be writing a book, so is that what you're talking about? Somebody asked me what I'm sick from. I have a vaccine injury that caused shingles that was undiagnosed, and then I've got neural inflammation and central nervous system damage, which is awesome. I'm dealing with it. I'm a strong person, so it's been 3 years. I'm getting a little bit better. So yeah, we'll see how the next 2 years goes. But yeah, it is a challenge. Some days are better than others, obviously. But it's just something that I have to deal with. It's just how it is. All right, guys, I'm going to bounce. Thank you for being here. Let's do this all over again tomorrow for Wednesday. It is also my husband's birthday tomorrow, so yay. And then we're not going to have anything on Thursday, like I said, in honor of Jimmy Carter. Markets will be closed, so no broadcasts either. Thank you so much for being here with me. I'm Deeyana Angelo, and this has been the London session on TopstepTV. Take care.